Get ready for the news that is shaking up the business world right now. We start with entrepreneur Mark Cuban, and he is dropping some serious wisdom on what truly makes a startup succeed. Cuban is arguing that having an exit strategy is actually the first sign your venture is doomed. He stresses that true success comes from unwavering passion for the difficult parts of a business, because without that dedication, initial excitement just fades fast and the whole thing collapses. Stick around to find out what else is happening in the markets. $1 million across 85 Shark Tank investments, revealing the harsh lessons learned from angel investing and venture capital. Discover what the average investor can take away from his track record and how he diversified his portfolio across everything from the NBA to pharmaceuticals. And finally, we tackle the bigger picture of the economy and healthcare with Mark Cuban questioning the insurance system. Cuban is demanding to know why insurance companies can deny care without facing the same level of liability as doctors and hospitals. He proposes radical transparency in healthcare pricing, suggesting the system could shrink dramatically if it became less dependent on insurance bureaucracy. Don't miss this crucial breakdown of the future of healthcare finance. Stay with us for the rest of the show. Entrepreneur Mark Cuban has issued a stark warning to startups, asserting that the presence of an exit strategy is actually the first indicator of potential failure. Cuban argues that sustainable success is rooted in an entrepreneur's unwavering passion, not a pre-planned exit plan. He emphasizes that without a genuine dedication to the often mundane and difficult operational aspects of a venture, initial excitement inevitably wanes, leading to premature abandonment of the business idea. This perspective contrasts the typical focus on exit strategies with the necessity of deep, sustained commitment to the day-to-day challenges of building and running a company. Mark Cuban, the successful owner of the Dallas Mavericks and investor on Shark Tank, shares practical, down-to-earth advice on managing personal finances, emphasizing smart investing over unnecessary spending. His recommendations focus on curbing impulse buying and building long-term wealth. Cuban advises consumers to adopt bulk buying strategies for essentials like toothpaste and soup to combat inflation, suggesting purchasing larger quantities at stores like Costco. He also points to the importance of checking local rates for the cheapest auto insurance. Regarding debt, Cuban strongly warns against high-interest credit card debt, noting that minimum payments on such cards can result in significant yearly losses. He suggests rolling balances onto cards offering a 0% introductory APR, while cautioning consumers about potential fees on low APR transfers. To reduce recurring expenses, Cuban encourages adopting a living as a college student mindset, spending less than earned, to streamline the budget. He also cautions against overspending on subscription services, such as beauty boxes and meal kits, which can accumulate significant annual costs. For wealth building, Cuban champions moving savings beyond traditional accounts into assets like index funds or real estate to outpace inflation. He stresses that status-seeking purchases, such as expensive cars or luxury vacations, often lead to debt rather than genuine wealth. In education, Cuban suggests seeking lower-priced institutions for degrees while also exploring online learning opportunities to reduce commuting costs. He famously advises to go to a cheap school when considering advanced education. For practical cost savings, Cuban suggests leveraging DIY skills for home maintenance, such as lawn care or minor repairs, to avoid high handyman fees. To control impulse purchases, he recommends implementing a 24-48-hour rule for non-essential items before making a purchase. Cuban's overall philosophy centers on consistent, disciplined habits in small financial decisions to ensure money is spent wisely, invested smartly, and focused on future financial security. Mark Cuban, the billionaire entrepreneur best known for his time on Shark Tank, has revealed that his extensive investment history on the reality show resulted in a net loss. Cuban disclosed in a 2022 interview to the Full Send podcast that his $20 million investment across hundreds of episodes since 2011 yielded losses, stating candidly, "I've gotten beat." However, the narrative shifts when considering the full picture. Following the airing of his final episode in 2025, Cuban informed CNBC that he had earned up to $35 million in cash returns, and that the mark-to-market equity of those businesses is valued at least $250 million, representing paper gains rather than immediate cash. This experience offers several key lessons for everyday investors. Investments popularized by shows like Shark Tank are typically high-risk angel investing or venture capital, focusing on early-stage companies. While the failure rate for startups is high, Harvard Business School estimates it closer to 75% rather than the common 90% myth. For average investors seeking security, the advice leans toward guaranteed returns, such as high-yield accounts like the Wealthfront Cash Account, which currently offers a variable APY of 4.05% through various programs, significantly outpacing national deposit rates. Cuban's success is also attributed to diversification. His portfolio extends far beyond Shark Tank ventures into sectors like pharmaceuticals, tech, and entertainment, suggesting that spreading capital across varied bets is crucial for weathering setbacks. For ordinary investors, the core takeaway is the necessity of diversification. Beyond traditional avenues, the article suggests exploring accessible options such as real estate, leveraging direct-to-investor models like Lightstone Direct for multifamily assets, and hedging against inflation through assets like gold, which has historically served as a safe haven. Furthermore, art, with its low correlation to traditional stock markets, is highlighted as a potential diversification tool, with platforms like Masterworks allowing fractional ownership of high-value pieces. Finally, expert guidance through platforms like Mobi can help reduce stock-picking guesswork. The overarching message remains: start small, learn the risks, and diversify your portfolio across different asset classes to build long-term wealth. Billionaire entrepreneur Mark Cuban has sharply criticized the U.S. healthcare system, questioning why insurance companies can deny medical care without facing significant liability. In a recent post on X, Cuban asked a pointed question: if insurers can deny care as medically unnecessary, why are they not required to carry malpractice insurance when errors lead to patient illness or death? Cuban responded simply with none, highlighting a perceived gap in accountability within the insurance sector. This sentiment reflects a long-standing critique Cuban has voiced regarding the role of insurers as powerful gatekeepers influencing medical decisions, while largely avoiding the liability faced by physicians and hospitals. Cuban's concerns extend to the systemic complexity and cost of healthcare administration. In a January 2025 blog post titled, "A Few Words on Healthcare," he argued that while healthcare itself is simple, the financial side is unnecessarily complicated. He advocated for greater transparency in pricing, suggesting hospitals should disclose the actual costs of supplies, labor, and treatment materials used for each patient, rather than relying on bundled procedure prices. Cuban contended that insurance bureaucracy, including billing disputes and administrative costs, dramatically inflates healthcare spending. He further proposed removing insurance companies from routine healthcare payments entirely, estimating that increased transparency could shrink the roughly $5 trillion U.S. healthcare system to approximately $2.5 trillion. Cuban also criticized the competitive arms race among hospital systems vying for expensive facilities and branding. These critiques resonate with frustrations felt by many consumers regarding denied claims and prior authorization battles. One commenter noted that in certain hospital arrangements, denied claims seemed illogical. Cuban's broader vision for healthcare reform centers on reducing administrative overhead and increasing financial transparency. The discussion underscores a growing debate about the balance between insurance regulation, provider accountability, and the overall cost structure of medical services.